This conference will now be recorded.
Okay, it's September 1st, 2021, and this is the Dayton Town Council. We're holding a special meeting, our budget work session. We're holding it over the phone. And first, we'll start with roll call to make sure everyone's here. When I say your name, could you just acknowledge that you're here? Ashley?
Here.
Dan?
Yes, here.
Carla?
Present.
Ron?
Here.
So all 5 members of the town council are here. We are missing Reed, but we do have clerk treasurer Michelle Freeward on the phone, town marshal Scott Taylor, town manager Mark Harlow, and Janet Alexander.
Thank you.
Okay, take it away, Janet.
Thank you. Thank you for letting me talk to you this evening. It's a pleasure working for you. I don't know if you all remember, I was engaged last year to assist with the budget. We had a brief meeting for the public hearing, and this year we are now having a workshop. So I consider this a workshop for you to give me input about the line items, the spending plan for the 2022 budget. But before we start into the line items, I just want to review the budget forms in general. So the first thing I want to point out, if there are new members of the council or maybe even some older members, the framework that I work under is, as a community, you have funds that are civil town funds, and you have funds that are enterprise funds. The budget process is focused exclusively on the civil town funds. Your enterprise funds would be water, sewer, stormwater, gas, electric, any enterprise or utility fund that you manage. And this process is not at all concerned with that. And the reason for that is that this process is focused on generating or permitting you to levy property taxes. That's why we have to go through all of these gymnastics. Over the years, the state has kind of perfected the number of forms that they use and the type of information they gather. And one of the things that's important to hold in your mind is that this is actually an 18-month budget. That sounds crazy, but because we don't stop and pause operations, we continue to operate 24/7, 365. They've determined that the last 6 months of the current year have to be incorporated into the planning and for the next year's calendar budget. So all of our reports are based on our situation on June 30 of the current year through December 31st of the current year, and then January 1 through December 31st of the coming year. Does that make sense?
Yeah.
Okay. So the reports that your clerk treasurer has provided to me are the fund report as of June 30, the appropriation report as of June 30, and the revenue report as of June 30. So I can see what you have spent for the first half of the year. I can also see what came in general revenue in all funds for the first 6 months of the year. And that's supposed to be predictive. So the assumption is if you spent $100 in the first 6 months of this year, you probably don't need to spend much more than $100 in the last 6 months of the year. There are a few exceptions to that formula. Well, the general rule is because you adopt a salary ordinance, you're going to pay roughly the same amount every paycheck through the end of the year. For the most part, your utilities are going to stay fairly stable. Of course, just like in our homes, those costs fluctuate depending on the weather and the circumstances. Liability insurance is one of those that is less predictable. Well, no, I take that back. Liability insurance in municipal government is generally paid in 2 ways, either quarterly or annually. Annually is ideal because they normally give you a significant discount. If it's paid annually, though, it might be paid in March or October, so it would skew your spending. If you look at your appropriation report, I really like focusing on how to read that report to see what I see. So if you could pull out the appropriation report that I sent you, and please, you all have it.
Janet, is that something you just sent us, or was that from
Meeting.
a couple weeks ago?
No.
Hello? Are you still there, Janet? It looks like Janet is off the call. Let's give her a minute to call back in.
Hey, Jen, this is Mark. So which form is she referring to?
The appropriation report right now.
I think
Well,
she wants you to pull up
how-
the one that I sent with the percentages that were left.
I know I've seen that. When did you send it so I can go back in my emails?
It was,
Is that the Form 4B?
no, it's the appropriation report that I sent on Friday, August 20th. I'm gonna reply all to this email and reattach it in case, so everybody doesn't have to search for it in case they don't have it printed. So that should pop up on your email right now.
Thank you.
You're welcome. Did you get it, Mark?
Yeah.
Okay.
Hello?
Hello, you're back?
Oh my God, the internet dropped out. I can't remember the last time that happened. I apologize. Does anybody remember the last thing I said before I was so rudely cut off?
How about your appropriation report? And then,
Yay, okay. So, I think we'll be operating by phone, at least for me. The appropriation report that I'm looking at for you right now is, it starts with the town council salaries. And I'm going to tell you that this proves that I definitely need your input, because when I put in your budget last year, I inflated the council salaries. And you can see that because as you read your council salary line across the top, the first column is titled current, and that is the amount that was appropriated and posted to that line item. But as you read across, you can see month to date expended, so that's the month of June, and year to date expended is the total amount expended for council salaries for the first 6 months of this year. Then it has a balance of unencumbered balance, meaning unobligated, of $8,211.24. That's also the unexpended balance, which says we have 63.77% remaining, which tells me that I overfunded that line item. The ideal for that line item would be 50%. So when I did your budget last year, I probably assumed that everyone would get a 3% raise, and I built that in, but that's not what happened. As you read down, you see that most line items, at least in the salary area, are funded above 50% on June 30. So there's a little bit more money in there than what we really needed. The overall, so the other thing I want to point out in your appropriation, on the far right or left-hand side, you see where it has the fund number and the category number, and then the line item. The category 1 is salaries. Category 2 is supplies. I sometimes refer to this as, so these are the objects of expense. 100 series is people. The 200 series is stuff, stuff you buy and use up. It can be office supplies. It can be bullets for the police department. It can be grass seed for the cemetery or for the street department. It can be gravel. It's just any number of things that you need to buy. It can also include computers, office equipment, just the stuff that you have to buy to run your business. And the 300 series is professional services in general. And that can be me, a consultant. It can be a lawyer. It can be the town mechanic. It can be the post office. It can be a road designer, an engineer. It can be a software vendor, computer repair. It can be virtually anything. It's someone or some entity that you pay to perform a service for the town. So 300 are other services and charges. And then the 400, I used to jokingly call it big stuff. So for the most part, if you buy something out of the 400 series, I usually ask myself 2 questions. If a single item costs $1,500 or more, it might be a capital asset. If it costs $1,500 or more and I have to call the insurance agent to let him know that I bought it, it definitely is a capital asset. Okay? Can you hear my cat? I'm sorry. Okay, so that's how the objects of expense work. So in every budget, so in every fund, they follow the same pattern. So the first budget happens to be the general fund. So that's Fund 101. And then the next one for this year actually is CARES, so we're going to skip that. Then 201 is MVH. And out of MVH, you have employee salaries for street laborers. You have operating supplies. You have professional services. And generally in MVH, we fund paving and road projects. Most of that now we refer to as the 203 restricted. Something happened a couple of years ago where the legislature has ordered clerk treasurers to segregate 50% of gas tax distribution income into Fund 203, which can only be used for construction and paving and repair of roads. So we built that in. Your infrastructure line was $100,000 last year, and it looks, at least as of June 30, you hadn't spent hardly anything from that. So the reason I want you to look at your appropriation report this way is because in the gateway, your Form 1 is supposed to mirror the gateway or your appropriation report, but they don't talk to each other. The gateway and the Keystone appropriation report are not the same. One comes from your in-house system and the other one is populated by me. So sometimes they don't match up exactly, and that's an error on my part. So if you see something like that, just point it out to me. Okay? Do you have any questions about how? Yeah.
So just so you get a heads up, that MVH infrastructure, that 100,000 that we typically do each year, that is strictly for our CCMG grant matching. So that's why that's not touched until we do that work.
Excellent. That makes perfect sense. And the funds for that, the match, is generally from the gas tax revenues. And I'll look and see if you get exactly that amount, but that's an excellent set aside. Do any members of the council, do you have any questions about how I've explained the appropriation report? And have I been unclear in any way?
I have no questions.
Okay.
Okay.
I understand.
Great. Thank you. Okay. So I sent you a group of documents, and I just want to make sure that you that I talk about each one of them, explain their value and their end use in this process before we get onto the Form 1. Some of the random documents I sent you. So people talk about the budget process. They think the Form 1 is the budget. They treat it like it's the budget, and it's just part of it. The number one part of the budget, of course, is revenue. So I like to make sure that you have some idea of where we get our information to populate the revenue report. So your number one source of revenue, at least for the general fund and for, well, actually the general fund, you operate almost largely from there, is your number one source of revenue is property taxes. Your number two source of revenue is LIT revenue, or local option income tax, which was authorized years ago in the 70s through property tax replacement credits. You get $21,000 next year in LIT revenue. So in addition to your property taxes, you get public safety revenue of $7,800, just a little more than that. And
Janet?
Yes, ma'am.
I'm sorry to interrupt. What are you looking at? A form that you sent us?
Yes. So I sent
Okay,
you a form that I did not title it. Thank you for stopping me. It's State of Indiana, Indiana Department of Local Government Finance, Local Income Tax Distribution Report. It lists all of the towns, and then
Oh, yeah.
state and civil towns. Do you see it?
Yep.
Great. So they're supposed to put that out. It's a certified report. They've been a little slow about it since COVID because of employment issues. Your revenue has actually dropped slightly in this area from last year, but not tremendously. They know, at one time they would call this a certified lit order. They're being cagey about it right now because they're really not sure what they're going to be able to collect. At one time, this was money that they had in the bag 2 years out. So they would easily say certified. That's not necessarily true anymore. Once we get through this pandemic period, a couple of years from now, I'm sure that it'll go back to guaranteed revenue. But it's very close to guaranteed. So they're only releasing the most conservative numbers at this point. There's a second report, 2 pages, and this one is titled Estimated Miscellaneous Revenues for Budget Year 2022. And the DLGF puts this out, and it details specific types of revenues and the funds that they go to. The first one, so you know you're on the right page, is for cigarette tax, CCIF. And that money goes into your Cume Cap Improvement Fund, which was created when they did the cigarette education, 15 years ago. And then they also implemented higher cigarette taxes for smoking cessation and tobacco training. That at the time they did this, so in the early 90s, it was restricted. You could use the money to buy computers or technology. And you'll laugh, but at that time, lots of towns did not have computers. Your town may not have had computers. So that was the money that was set aside to buy computers. At this point, it can be used for any lawful governmental purpose. The next cigarette tax line is money that goes directly into the general fund. So we record that as an anticipated revenue for general. The next tax is financial institution tax. You don't get any, and I don't understand that, but banks that operate in the state of Indiana that have bricks and mortar in Indiana pay this tax, and then it's distributed to units. But you don't get any. Sad. The next one is local road and street revenue. I'm sorry, go ahead. Was there a question?
I don't think so.
Okay, good. Sorry, I heard a noise. Local road and street, that is your LRS. That is the only revenue that local road and street receives. It does not receive property tax revenue. And local road and street is one of the original restricted road funds. It can be used for professional services, engineering and designing. You can buy land with it. You can construct roads with it. You can use it as matching funds for community crossing. And you can buy road and street equipment. I know some towns save up and use this to replace their snowplow or some of the assemblies or trailers or that sort of thing that they use to maintain roads and to operate the street department. The next revenue is an excellent revenue. It's your license excise tax, and that's literally when we buy our tag or when we renew our tag, depending on your last name. the collections come in twice a year with property taxes in communities. So if your community has an overage of people whose last name starts with an A, you're probably going to get most of your distribution in the spring tax installment. If most of them fall in the latter part of the alphabet, you'll get those in December. And because general fund is your primary property tax supported fund, the majority of that money is deposited into the general fund. A tiny bit goes into your CCD fund, and that's because you get a tiny levy for your CCD fund right now. On the back side of that miscellaneous revenue page, there's motor vehicle highway money. So I should have pointed this out, the first column is the 6 months of this year, the last 6 months. And then the second dollar value column is 100% of what's going to come in next year. This is the money that is divided in motor vehicle highway between the restricted fund and motor vehicle highway. So motor vehicle highway 201 is your first fund, and motor vehicle highway 203 is the sub fund, and that's the one where the funds are restricted for paving exclusively. The next revenue is commercial vehicle excise tax, and that literally is just box trucks. So when they get their tags, there's a formula on what's distributed to units, and that's how much comes into your actually general fund, not into the motor vehicle. That goes to general fund. And then the last one is ABC gallonage, which is wholesale liquor gallonage. So it's wholesaler retail receipts. So those are your main sources of revenue. After that, you have miscellaneous revenues that are locally collected. And really, there aren't that many. The two that you have that are unique to Dayton include rental of property and earnings on investments and deposits, which you make excellent interest on your deposits. Very impressive. And then rental of property, you have excellent receipts there. So the form that I want you to look at now is the Form 2, the miscellaneous revenue.
Which one? Could you repeat that?
Form 2.
So it was titled 2022 Revenue Estimate. And then form number 2, miscellaneous revenues, all funds.
I'm wondering if I'm missing something, because were you just looking at budget form 2, estimate of miscellaneous revenue?
No, I am now. Before I was looking at the state's readout.
And that one was titled what?
So the one that I was reading out from was my little notes dropped. At the
It was
title
the state
of
of Indiana. Go ahead, Janet.
State of Indiana, Indiana Department of Local Government Finance, estimated miscellaneous revenues for budget year 2022. And it's a two-sided document. And it came along with, it came along with that lit estimate as well. So that was a set of pages.
Mm-hmm.
And is this, oh wait, here we go. Oh, okay. I
I
have
know
it
it's
stapled to the
confusing.
one we're looking
They
at
all
now.
look the same. Pardon me?
Yeah, well, I had it stapled to the one that you're looking at. No, this is not the one we're looking at. Oh my gosh. Okay.
I know they all look the
It
same.
makes sense now. Well, before when you were like, it's on page 2, I was like, no, that's not on page 2. That's right here. And I was so confused. Okay. I have it stapled to the back of this other one. I don't know. Okay. I'm
It's
with you now,
okay.
though.
I know. There's a lot of paper. You should see my office. So now go to that budget form 2. So the information that was on those pages that we just looked over is typed into the state budget form 2. And you can see that the first one on the budget form 2 is Casino Riverboat. And that's an interesting, you get one distribution a year in August, and you get the same amount of money every year. This year, some units didn't get the full amount, and they'll continue getting money until their total reaches their contractual distribution amount. And that contract is with the state of Indiana, and it's revenue sharing. So units that don't have a riverboat in their county all get some form of riverboat revenue sharing money. And that you actually have a separate fund for Casino Riverboat. Some communities use that as just the general revenue that goes into the general fund, and others segregate it. There's no right or wrong. Either way is fine. It is revenue sharing from casinos. I don't know how many more years this will go on, but it is excellent revenue for you. Like $8,000 a year is good money. You see the general fund. So I posted the numbers that came off of that report directly into your general fund. And then information provided by your clerk treasurer backs up, by the way, the historic nature. So I can see that there's history that these revenues have been consistent over time. So that looks good. That's where the information about rental of property and the investments on deposits, that also came in from her records on her revenue summary. The next fund is local road and street. So you can see that's exactly what was on the report that you were provided. So the provenance of the local road and street revenue estimate ties right back to the state's report, and on and on. So I know that you can read this, and I am not going to make you listen to me read it to you. I do want you to look at the back side or the back page of that Form 2. There's a fund called LECE, which is Local Law Enforcement Continuing Ed. And for many, many years, that was the only extra money that towns received for police departments. This obviously predates public safety LOIT distributions. And the revenue for this fund would come from gun permits, VIN checks, title search work, or vehicle titles, and accident reports. And in some communities, they adopted resolutions where certain permits, like golf carts, etc., might go into that as well. And the money is, under the law, you're allowed to use it for police education. So for small towns, they would use that to send their marshal to the academy, or to obtain educational materials, or even buy special equipment for police officers out of that fund. Since gun permits are no longer going to be a major source of revenue, or any source of revenue at all, this fund eventually, I think, will be diminished to being almost non-important, particularly in communities that have public safety low it. So, do you have any questions about your miscellaneous revenue report?
This is Scott. I do. The gun permit that you just brought up, why
Yes.
does ours read 0 at the current time?
Because you're not going to get any. So they eliminated the permit fees on July 1. So there's not going to be any permit fees this year from July 1 through December 31st. And there will not be any revenue at all on gun permits next year.
I understand that. So this doesn't indicate revenue from December or January through June.
No, this is
Scott.
this is part of that 18-month budget. We're just doing the last
Okay.
6 months of this year and the 12 months of next year.
Okay.
Janet.
That answers that. Thank you.
Yeah.
I don't think that ours actually shows the revenue because we collect internally for our gun permits when we were getting them. So we didn't get it from the county. They actually went to the marshal, paid him, he brought it here. So it wouldn't show up like how the clerk or the other ones that were showing that we would get, correct? Because we weren't getting them from the county. They were in-house.
No, because all of your reporting came off of your revenue reports as well. So you did get, so the reason there's zeros is because it's just the time frame. There's no gun permit money going forward from June 31st forward. But I will tell you, let me look at your gun permit money that came in prior. I can give you that information. You got total revenue for the beginning of the year, Scott. You brought in $650. $650 was brought in on gun permits from January 1 to June 30. No, yeah. So before the July 1 cutoff, you made some pretty good money on gun permits. Your total revenue June 30 for Lisi was $1,500. So it is quite a loss to you.
Right. That makes sense. I just was reading that.
I know it's hard to see
incorrectly.
zeros. Nobody likes
Yeah.
to see zeros. I'm with you.
Thank you.
Oh, you're very welcome. That was an excellent question. I wanted to focus on that because I know that will be of interest eventually. Okay, so that's your revenue side. Another form that I sent you was your current year financial worksheet. So we needed to have a baseline of where things stand. So I want you to take a good look at that. Of course, Casino Riverboat, for some reason, the state thinks that should be the first fund shown. So you had a budget last year. Sorry. You had a budget last year for Casino Riverboat to spend for this year for $15,000. It's not unusual. You didn't spend any of that money yet. Often that's used as a community crossing grant match. Excuse me, I'm going to cough again. There has been no money spent. And on June 30th, your cash balance was $83 or $83,999. I apologize. I'm going to need a 1-minute break.
Okay. I'm sorry I don't have some wonderful hold music for you all.
Just sing.
Before I start hacking up along, I want to tell you what lines to look at on all of these reports. Line 1, line 6, line 7, and line 15, and in the case of the general fund and CCD, line 16. So line 1 is the approved budget, and that is populated by the program. I plug in the information in line 6, which is what you've spent based on your fund report and appropriation report. Line 7 is a calculated number. So it's the adopted budget minus expenses through June. Line 15 is the fund balance on June 30th. And line 16 is the balance of property taxes that were not collected in May and received in June that will be collected and distributed in December. Your general fund. So what's interesting to me, and what I want to point out again, is that I overfunded your spending last year. But the good news is you guys only spend what you need to spend, and that's obvious on the general fund. If you look at line 6 and 7, you've spent $183,313 in the first 6 months. You had $250,000 remaining to spend in the last 6 months. So you can see that what I would have looked for would be a similar number, roughly even to $183,000. So there is definitely some cushion in your budget. And I apologize. I have this terrible cold. It just comes on. Your June 30 cash balance, I think I know I said last year, and I'll say it again, you have very strong cash. You don't spend money when you don't need to, and that's a very good trait in a town. So if you look through those and see if you have any questions or qualms about anything that you see on those reports.
Janet, do you have the 5-year expenditure history from funds?
No, I don't think I do. I think I did a cash flow though. Let me check. Because I always worry about budgets. No, I did not. So what I did is I looked back at your annual reporting. So your annual financial reports going back to 2017. And in virtually every calendar year, you received more than you dispersed in virtually every fund.
Okay. Is that something you could forward to us? Not right this second necessarily, but
Sure. So one of the things I was going to do as part of what I do with the budget is I actually do a semi-detailed cash flow of the funds that we're budgeting. So you'll have that before you adopt. I don't know that I can get it done before the middle of next week, but I think I can have it done by the end of next week. Will that be okay?
Yeah.
Okay. And what that does is it shows all of those revenue types, what you've gotten in every year from 18, 19, 20, 21, what we projected, and then everything forward is a projection on based on averages and history. Does that work?
Would it be possible to get the 5-year expenditure report to send?
Is there such a report generated? Because I've never seen one from Keystone. It doesn't mean that there isn't one. I just don't know. Michelle, is such a report? Does it exist?
I've not seen it, but I can always call Keystone or look.
Okay.
Okay.
But
Thanks.
I can roll back. I can do a 5-year revenue history going back 5 years. Absolutely. So I will definitely do that for you, Jen.
Thanks.
You're welcome. Are there any questions about the current year financial worksheet? Okay. So the next thing I want to talk about then is your Form 1. And I know you probably thought it was weird that you got 2 reports. One moment, please.
We got to get through this so Janet can get some vitamins and some sleep. I feel terrible. You have to do all this while you can't even stop coughing.
It just keeps coming on. I don't know why. I haven't coughed all day. Form 1 is the general fund exclusively, and the other one is all of the funds that we appropriate. So the best way to go through this exercise is to compare the Form 1 by line item to your appropriation report, the one that Michelle provided for you, your June 30 appropriation report. And I'm going to bring up your Keystone report, and I'm going to edit line as you tell me to. So please take your time getting comfortable looking at your line items. And this is a point where we talk about what's there and what should be there.
Instead of going line by line, would it be easier to just say, hey, if you see one that you want changed, mention it?
So are we looking at Form 1 all funds or Form 1 general fund?
I think it's all along with the appropriation report.
Janet, is this something that we could go through and then come back at the budget hearing and make changes? We did not lose Janet. I think she's just coughing right now, so she has herself muted.
Oh, sorry. I heard you talking. I'm so sorry, Jen. So,
You're fine.
So let me tell you what your time frames are. So you are scheduled, so your regular budget meeting, your regular meetings for your board, your next one is the 13th, right? That was when we scheduled the public hearing on the budget. Not quite as detailed as this, but you know, an opportunity if anyone had any comments that they wanted to ask about the spending plan or look at basically the spending plan, that would be the opportunity to take public comment. You could also edit the budget at that point, but we have to advertise the highest possible. So honestly, that's probably what's in there now. Anything that you would reduce, you'd want to try to do at the public hearing so that we can prepare an ordinance for it that would be ready for your signature at your adoption meeting October 11th. So you could, between now and your public hearing date, come up with recommendations either individually or if you want to schedule another meeting to do it, to compare the Form 1 proposal to the appropriation report. But I will tell you that I basically put in last year's budget.
Okay.
Almost essentially. So I want to look at your appropriation report. But I believe what I put in is a mirror of what you did last year, unless I saw something that just seems so out of kilter that I didn't know what to do with it. So I'm looking at the general fund now, and I genuinely believe that's what I did. I'm looking, yep. So basically, this is a repeat of last year's budget. So you didn't give 3% raises last year. If you chose to give raises this year, I would keep in mind we pay exactly what your salary ordinance says. The salary ordinance is the document that is dominant. The budget, they always title this a budget estimate. So you could put in $1 million for the council salaries, but if the salary yeah, I know. If the salary ordinance doesn't allow it, you only pay what the salary ordinance says. So that is your protection on the 100 series.
So when you say that we need to advertise our highest number or whatever, like we can't go up. So just for example, our fire contract, I think it went up $500 and we have $20,000 in there and it's $20,500, I think. So can we, at the September hearing, can we say we need to change this to $20,500? Or are you saying after tomorrow when this gets submitted, we cannot go up?
Once the advertisement goes up, but line items don't matter as much as the total. As long as, so whatever number we advertise, whatever number is submitted on the advertisement, that's our highest number, but we can move things around inside that number all day.
Okay.
But I can also, as soon as my internet comes up, go in and make that change right now, too.
Well, I was just thinking it would be nice since we just got these this afternoon for us to all take some time, really sit down, look through it, and then bring into the September meeting and do it then instead of right now going through each thing right now as we all sit on the phone silently.
Yeah,
I don't know how
I'm totally good.
But Okay.
But I will say though, since you pointed that one out, I really do want to go in and make that change. So that's an excellent point. So it was $500 added to the fire contract.
I believe so. Is that what everyone else recalls? That sounds
It is.
right.
I have it right here in front of me.
Thanks. Yeah, $20,500.
Okay. So as soon as my internet comes back up, I'll make that change. And I know Michelle and I will talk about this tomorrow afternoon. So if there's anything else that you're worried about inflating, the reason I'm pretty confident with at least the numbers being high enough is that I built in the 3% raises last year that you didn't give. So if you do give them, the funds are already planned in the spending plan. And you can see from that appropriation report that Michelle gave you, you really aren't spending a ton of money. In each category, if the overall category is in excess of 50% or more, you're in excellent shape. I wish everybody's budget looked this nice.
Awesome.
Or at least their spending was this conservative. But I don't see any reason. So what I will say is I've advertised, or we're prepared to advertise an amount that is equal to what we advertised last year.
Did you up the insurance?
I did not. I didn't really have enough intel to know what to do with that.
Okay.
Do you think that there's a number we should be building in? Or the other thing is, because you have such strong cash, if we didn't manage to get it done and it came in and exceeded our cushion wall there, we can always do an additional appropriation.
Perfect. Yeah.
I'm looking, I think. Okay, so I will say last year, I'm looking to see what we appropriated. Why? Casino Riverboat, same amount. General fund, I'm advertising the same amount, or my intention is 20. Local road and street is the same. Motor vehicle highway, last year, I advertised a number that was $30,000 higher. And Michelle, did you guys complete a community crossing project this year? Are you going to complete one?
I think we're getting ready to, correct, Mark?
Yes.
So
we literally just got our funds deposited today for our community crossing grant. So.
Okay. So I'm not sure what it was when I was plugging these numbers in, why I came in $30,000 lower in my motor vehicle highway appropriation for next year than this year. So I want to look and see what I did. So what I'm looking at, just so that I'll clue you in on where I'm at, I'm looking at MVH, starting on page 2 through 3. And that's where it is. So last year we had a construction, repair, preservation of roads of $100,000. and I only built in 70,000. I think that was because I must have had an indication, at least my gut must have told me, that we wouldn't have enough cash to support a $100,000 appropriation. But so can I ask, what is the total cost of the CCMG project that you're embarking on?
Total cost is 295 or 300,000, and our share would be around 75,000.
Okay. So, and we have that built into this year's budget because Michelle, didn't you have me put in 100,000 last year?
Yeah, it's as long as I've been here, I think it's always been just set at 100,000. I think last year, correct me if I'm wrong, I think we were maybe over. Am I thinking that correct, Mark? And guys?
Yeah.
So we had to pull from some other
we
spot?
were just like 5 to 10,000 over.
Yeah.
I guess
Yeah.
something that I would point out is that these projects, the cost of these projects is going up significantly, just like everything else. So I would not want to handcuff us by saying that in calendar year 2022, we're only going to do $70,000 worth of work as our 25% because we have some street projects we want to do and the bids just go up year after year. So I think I would prefer to see that go back to 100 than stay at 70.
Yes. Yes, I agree.
I will. I'll do that. I'll up that, and then that cash flow will show us whether or not that's really supportable. So one of the things I want to make sure that I say this every year. I want you to remember that the DLGF will approve a fundable budget. So that means as long as we have $1 above what we plan on spending in available or anticipated cash, they'll approve it. They don't care if it's sustainable. Meaning, if you decided to go out and hire like 4 street department workers out of MVH, and we could afford it next year, we wouldn't necessarily know whether or not we could afford it 2 years later. So they would approve the budget because it was fundable, but they have no interest in whether or not it's sustainable. So I'm always a little cautious, but I don't see a problem upping that for next year. But that makes me even more eager to do a projection to make sure that going forward we can still carry it. So I will make that correction. Thank you for letting me know that.
Okay.
So let me go back to that. I'm glad I caught that one. I want to go back and I want to keep looking and see if I see anything else that yells at me. I did not put a budget in CUME-CAP improvement. I didn't fund anything. We could do, since you haven't spent any CUME-CAP this year, let me see what the fund is. Yeah, we could easily do another 15,000 for next year if you want me to build that in just for conversation.
I think that'd be a good idea.
Think about it again. I missed
15,000 for CUME-CAP improvement. We had 15,000 in last year's budget. I did not put it in. And that's probably just an omission on my part. And then
I guess
Cume Cap.
I'm not seeing it. I'm trying to find it. I'm not seeing it.
Oh, so if you look through your so on page, you're going to see it on page 3. There's Cume Cap improvement. There's no budget. There's
Got
no
it.
dollars. I'm sorry. It's really hard because I look at this stuff all day long, so it's really easy for me to see a nothing. It's really hard to point out a nothing to someone who's not looking at it all the time. I'm sorry.
That's all right. I just wanted to make sure I was looking at the right thing. So thank you.
And then another one that we budgeted last year is Cume Cap development. Last year, so Cume Cap development, you have a very small tax rate. We talked about it last year. You could re-establish that rate to 5 cents. Right now, I think it's 0.017. It's a very small tax rate. So you're bringing in just a tiny bit of money, somewhere between 9,000 and 7,000 a year. Cume Cap development, your ordinance is so old, I'm not sure what the intention was, but normally Cume Cap development money is used to purchase land or buildings or to do infrastructure projects, civil town. So that would be for fire, police, street, or town hall. You currently have, if you look at your current year financial worksheets, that'll tell you what the balance of those funds are. Your Cume Cap development fund right now just has $16,000 in it, and that's not a whole lot of money. And so I would suggest not bothering to do a budget unless you have a specific project planned for spending that money. And if something does come up, you can just do an additional appropriation that you would tie back to your with your spending plan. That is one alteration I'd recommend you stay with unless you have something in mind.
Where does the Cume Cap development money come from?
It's actually a special property tax rate. So when towns pass a Cume Cap development ordinance, the terms of the ordinance are that every ratepayer would pay up to 0.05 cents per hundred of assessed value for this Cume Cap development fund. I'm going to say something that will sound weird, but it's a rate-driven fund. So the higher your AV goes up, and the higher that rate is, so right now your rate is 0.0175, you take that rate times your net assessed value, and that's the amount of money you're allowed to collect.
So that essentially is a tax increase.
Yeah.
Correct?
Yes, absolutely.
I'm not sure if that's something I want to do, guys. Just my opinion.
I brought it up last year, and I was soundly told no. So I remember it really well.
I agree with Carla. I agree with Carla. We shouldn't raise the taxes.
Well, and honestly, I will say, if you guys were hurting for money, if you didn't have strong cash, I would be much more insistent. But I agree with you. I mean, there's nothing compelling this decision. I have other communities where it's their only option to increase revenue. But you're not in that position. You're in a very comfortable position that way. You have very strong cash.
So I'm glad that you don't want to raise taxes, and I hope you agree with me that there's no reason to budget that money for any in the immediate future. Do you hear my dogs? Is that what you're laughing about?
Yes.
All right, I'm closing my office door. It's dinner time. They're explaining their joy.
Feed me.
Yay, chicken!
I don't know if it needs to be said, but I agree with Carla and Ron that we should not raise the taxes.
That's why her dogs are so excited.
Yay! But on the budget question, so I just don't see any reason to put any planned spending in for next year in Cume Cap. It doesn't, you haven't said anything that makes me think you have a project in mind other than roads. Roads seem to be your focus, which is an excellent focus. And if you let Cume Cap money pile up, someday you might have a project that it would be big enough to actually use to execute. If anything, maybe a match.
We lost Mark and Michelle on the call. The internet at Town Hall went down. So I think they're probably calling back in. They just want to wait.
It's Michelle.
Okay, we have
I had to call in on my cell phone.
What is it with the internet tonight?
I don't know. Our whole system just crashed up here at Town Hall.
Oh man,
that's so weird. When I lost the internet, I still don't have it. And you know, I'm in Johnson County. I'm not anywhere near Tippecanoe.
Yeah,
weird.
This is our luck.
Yeah, it's been a weird night. Sorry about that. So,
that's okay.
Is there anything about the budget process that you want to talk about in general? Is there anything that I've brought up that you don't understand or you would like to talk about more or explore in any way?
I can't speak for anybody else. I think I've got a better handle on it. I'm learning, but I agree with Jen. I think I'd like to just look at things a little better. I think what you're proposing here is probably fine to go ahead and submit, and then any changes that we'd want to make, as you said, we can kind of shuffle around if we need to, so to speak.
Yes, absolutely.
So
my only recommendation is that all of the shuffling gets done at the public hearing, so that Michelle and I have time to put everything together to have your ordinance ready for your adoption meeting.
Right, and then but we'll all have time to actually absorb everything that you've just told us and really look at things, and then come to that meeting a little more educated on what's going on and better able to approach any topic then that we may or may not want to adjust. At least for me, right?
I think it's great. Budgets are very hard to absorb. The total picture gets easier, but it's hard to do. They segregate it in so many little pieces. It makes it easier to swallow. But is it Carla? Was that you that I was speaking?
Yeah.
Okay, great. So one of the things I might suggest that all of you do is, because your budget is made up of these 9 funds. So as you look at the reports, try to just focus on one fund at a time on each of the reports, on the current year financial worksheet for that fund, the
Mhm.
revenue section for that fund, as well as the proposed budget for that fund. And I will update the budget with the correction for fire contract and the MVH paving tonight. So I'll send you a new set of Form 1s tonight as soon as my internet comes back up. But if you try to just focus on each fund in itself rather than the whole ball, okay?
That's a good tip.
Yeah.
Thank you very much.
You're welcome. Thank you. So the next step for me is once you settle on your spending plan, each of these line items, all of that information will be fed into a summary form, which is called the numerical 4B, which is the attachment to the ordinance, which is the Form 4. And in that 4B, it includes all of the information that came from the current year financial worksheet, all of the information from the Form 1, your spending plan, and the information from the Form 2, the revenue report. And that one is referred to as the, it's kind of like an exhibit, but it details the budget, the revenues, and the levies for the coming year. It also projects the ending balance based on reporting of at the end of next year on December 31st, 2022. So that's also a very helpful document, but I can't really produce them until we settle on your Form 1s.
Janet,
Yes, ma'am.
this is Jen. So I remember last year we talked a lot about asking for the max levy, and I'm just
Yes.
checking in to make sure that that's what we're doing.
Yes. Yes. I always recommend going for the maximum levy, and because of personal experience with the city of Franklin where we did not, and the levies were frozen, and we had to sue the state of Indiana to regain our levies. It was a 3-year nightmare. So I've talked to lots of people in state government and other city and town consultants, and we are all of one voice. You do not take the chance to not take your full levy. It can have
Great.
impacts that you don't foresee. And you do have a luxury. You don't have to raise taxes. You just simply you stay on the same track you're on.
Okay. That sounds good to me. Thanks.
So
You're
I just
welcome.
want to make sure I understand. So you're saying what you're presenting here, even though it's essentially the same budget that you presented for 2021, for 2022, what we're looking at is still the maximum that we could request. Am I understanding that correctly?
So the one thing that's not here, so did you see that in your packet that I sent you? I also sent you a copy of your maximum levy worksheet.
Oh, I see a worksheet. I don't see anything about a maximum levy on it though, so.
It's one of
hang
them that
on.
says State of Indiana, Indiana Department of Local Government Finance at the top. And then
One of
like
those.
the dollar line under it, it says calculation of estimated maximum levy for budget year 2020. It's just one page by itself.
Yes. Found it.
Yay.
Thank you for bringing that up, Carla. That is actually the missing piece. That's the whole reason that we go through this process, is to enable you to raise property taxes. And the dollar amount that I'll put in to raise, actually I'll put in a couple dollars more just to make sure you would capture the whole ball of wax, is at $271,402. And if you want to be even more specific, if you roll your finger up, see that 7,887? That's what the state of Indiana believes based on your current certified net assessed value of property in town. That 7,887 is what would come in for your CCD fund at the current tax rate of 0.175. Your maximum levy for the general fund is the $263,515.
Okay, got it.
Okay.
Yep.
So it's that dollar amount added to the miscellaneous revenue is your total revenue picture.
Okay.
Okay.
And that's just to clarify, in case people are listening and they're like, what, our taxes are going up so they can get this money? We are not raising any taxes. This is just tax money that we already get, and we just have to make sure it's high enough to make sure we capture all the taxes that are coming our way.
And you do actually have tax cap. Did I send you your tax cap worksheet? Now, your caps are really low, but you're still capped, which is interesting because they're so low. But I think I sent you your 2021 Tippecanoe County Circuit Breaker report.
Yeah. Yep.
Okay. Let me walk you through that. So, for those new to this government game, I think they started in like 2008, and then final adoption. We had two referendums on adopting property tax caps. So, meaning that an individual who lived owner-occupied home. So, I own and live in my home. My property taxes in total. So state, county, fire district, solid waste district, town, every minor district, township, etc. They can all adopt budgets with a tax levy, but if the rate exceeds 1% of my assessed value, they're not going to get their money. I only pay 1% of my assessed value into property taxes. So I have a perfect example. I live in a little cottage. We've lived here for 35 years, shortly after we got married. It's 1,000 square feet in Franklin. well, until the last 2 years, it was valued at 100,000. Now it's like worth 250,000. Who knows? But when prices were real, it was $100,000 house, and we have a homestead deduction. We pay $900 and some a year. Franklin, everybody around us is capped, so they only get as much as they can after the caps are taken into account. So back in the day, before tax caps were implemented, a community could levy virtually any dollar amount they wanted, and all taxpayers would have to pay it. So now it is capped at the 1% for owner-occupied homes, 2% for rental properties. So if any of you are landlords, you know that your rental property, you have to pay 2%, and commercial property pays 3%. And that was built into the Constitution. So if you look at that report that I included, on the front page, it's page 6 of 12, that's the whole county report. But your section for Dayton Civil Town, if you look across the top, your certified levy was $210,843. The auditor's abstract was just slightly higher. No, slightly lower. So they go by the lower number too, by the way. So you have over 65 circuit breaker. You have no circuit breakers. Your assessed values are still really low, and your tax rates in your district are below the circuit breaker cap. So the only thing that is deducted from your property taxes is this over 65. If you look up at Clarks Hill, you can see where they can't collect $5,700 of their tax levy, that they're capped, so they lose levy. So what tax caps did, well, if you look over at Lafayette, that'll make you feel good. They lose $2,799,000. Oh my gosh, that's terrible. So your tax rates are so low that you don't really run into cap. But if they were to go up, you would at some point. But you're only levying taxes for your general fund, your general operations. Everything else besides that CCD fund is supported through miscellaneous revenues. I don't know that I've seen a tax cap that low where it's just over 65. You should encourage all of your friends that are over 65 to go apply for that deduction.
Hey, Ron, you should go apply for that deduction.
Oh, no.
I won't respond. Jeez.
You just can't go anywhere. People are always picking on us. When we get old, people are mean.
I was helping him out. You said to encourage people.
Yeah, I did. You're right. I did. Encourage that. So, I don't know that I can add anything. I know that you have a lot to simmer over. And of course, I would be happy to join you at your next meeting if you think it would be helpful.
Okay. Yes. I think that will be necessary, probably.
It might be, but you might have a whole handle on it. You won't need to talk to me for another year. You never know.
We're experts. Like, who's Janet? We got this.
We got this. You could. Yeah.
Okay. Is there anything else?
It's such a nice group. They just really are very quiet. Nice. Well,
Anyone? Question? Okay. I can't decide
all
if
right.
no one has questions or no one's with us anymore. No, I'm just
That's also possible with the internet. We'll find out. As soon as my internet comes back up, I'm going to make those changes and send out new Form 1s, both sets, the general fund and the all funds.
Okay. And I was just checking my email again. I wanted to make sure there were no public comments, and I have no public comments, and there's no one extra on the call, so there's no questions from the public at this time either.
Okay, excellent. All right, thank you. It's been a pleasure talking to you, all of you, and I'm sure we'll be in touch. And I will get to work on that that advanced cash flow.
Thank you, Janet.
Thanks,
Get
Janet.
well.
You're very welcome. Thanks so much. Good night.
Night.
Okay, that was all we had on this agenda. So this meeting stands adjourned. Thank you, everyone.
Thank you.
Bye.